Hello everybody and welcome to another episode Between Plays, and today it's on GreenPower Motor Company. So just before we get started on that, I used to hold shares in GreenPower Motor Company before they did the reverse stock split, so 1-for-7 at the price. Of course, this is my opinion, at the price that they were going to be listed at. I ended up selling. I didn't want to be involved in the reverse stock split, you know, for let's say like 700 shares. If you own 700 shares, well, now you were like at 100 shares, you know. So I wasn't interested in any of that, and you know, and how I was looking at it is at the price it was at, I was like, you know, a lot of day traders would be involved in there, and you know, you're growing with the company at that price. And the Robin Hooders, millennials, like everybody would be involved, you know, and get in there when they see this company's growing and leaps and bounds and stuff like that. And it was very exciting. But once the reverse stock split came, I was at the same time as NASDAQ's listing. It was at the same time as the NASDAQ's listing. So they're on the NASDAQs now at the GP. Of course, very exciting stuff. Just saying, I used to own shares and then I got out because of that reason. But that all being said, I mean, the company is, you know, doing such amazing things. It's got the double-decker bus. It's got the cargo, first EV Cargo Plus delivery box truck, which is the only one, the only delivery truck in all of North America, according to on CDAR, what I've read, under their listings. And of course, they have the other vehicles as well that go with that. Hold on a second here. So they have their product line here. They have the Beast, which is the school bus. They have the transit line. They have the EV Star. Okay, and then they have also the Cargo Plus, which is the delivery truck. The vehicles are very, very, very nice. And of course, they're all electric, right? So very, very interesting. They have the double-decker bus as well, which is a beautiful bus to look at. There's the Beast right there, which is a nice school bus. And then you have the EV Star right here. This is also another nice vehicle. So, you know, naturally, when you're in the vehicle business, everybody's looking at, you know, the different types of vehicles that are involved. And they have, let's go here, see if we can get it there. And here's some GreenPower buses at the bottom there. So Snaps is 72, Snaps is Shuttle, EV Star. You got the Cargo Plus. EV 550 double-decker, EV 330, and EV 250. They have some nice ranges, over 150 miles and stuff like that. I was reading some articles about 3-4 months ago when I got involved about how airports are using the smaller ones and stuff, just because of the fact that they always do the same, basically circle, you know. And with this, it's just so practical and they save so much money. You know, they do their rounds, they have a few, they charge them up, and it just becomes super inexpensive for them. And of course, naturally, it's going to be inexpensive for everybody because it's just the way to go. And I mean, with their bus lines and stuff, New York just ordered 100 of their buses. I think it was September 30th, if I remember correctly. Yeah, so you're looking at, you know, growth. They're already going to, September 30th, there you go. GreenPower adds ABC Bus as authorized dealer in New York market. They had 100. They got different contracts going. They're in Vancouver, of course, naturally, but they are in the whole Los Angeles area as well. They got some of the buses that are there. I think it's Seattle. They have some buses. Anyways, look, they're in the United States and they're in Canada. So, and they're growing, which is extremely important. I mean, we just need to know that they're growing, right? Let's go here and let's look at some of their financials and stuff. According to Simply Wall Street, trading at 8.1 below our estimates of fair value. Earnings are forecast to grow 66.62%, 66.60%. So there are high risks here. They pass forecast to achieve profitability within the next 3 years. Pass revenues and earnings growth forecast to grow. So you're looking at earnings are forecast to grow by 66.6% per year over the next 3 years. Are they in good financial position? They have sufficient cash for at least a year of operations. They pass because they don't pay dividends. So is their dividend sustainable? Do they have sufficient financial data available? Yes, they pass. They have sufficient analyst coverage. Are there any concerning recent events? No concerning results, so they pass there. Has there been substantial insider selling in the past 3 months? No significant insider selling. And I can also tell you that after researching, they have significant buying from insiders. And do they have meaningful levels of revenue? Yes, 13 million, so they pass. Do they have meaningful market capitalization? Yes, they pass there as well. Of 315 million, I'm sorry. All right, so let's just go. Yeah, 315 million market cap, 315 million. So basically their share is at 1660 today. And GreenPower Motor, sorry, that's not true. 1660. It's because it's the GPV, .V for the Canadian market, which says 1660. But the $12 was what was being stated on the NASDAQs, and at $12.31 on the NASDAQs. So, but for here, we're going to keep it. Okay, so what we have for GreenPower when it comes to TSX, you have a buy rating from Yahoo Finance at 2. They're currently at 1660. They're saying that the average should be at 23.76 as a high of $30, low of 18.02. This is interesting. Their revenues was 13.5 million, but their earnings was negative at 5 million. All right, so I'm just rounding things out here. That's for that. Now I'm going to be going and using a different art. This is from TipSmarts, and it's just going to give me some information on media coverage of the company. So GreenPower here. And that has me at, so GreenPower here, it's going according to the NASDAQs at 1231. It's stating that they see it for analyst activity. They put it as a price target at 26.66, $31 as a high, and $24 as the low. And of course, this is for the NASDAQs that we're talking about here. So American dollars of 26.66. Their smart score is put as an analyst rating of strong buy. New sentiment, basically we have 59% bullish, but media buzz is fairly, there's nothing at all. Like it's, weekly average of 2.3 articles. So news score is neutral. Investor sentiment is the average holding size of, it's less than 0.1% of all portfolios hold GP. So on average, these investors allocate 14.1% of their portfolio to GP. So individual investor sentiment is neutral, but we have a strong buy, of course, as I stated a little earlier. When we go to Simply Wall Street, you have a 1-year return of 508.1 return versus industry. So GreenPower exceeded the Canadian machinery industry, and return versus market, GreenPower exceeded the Canadian market. Their valuation, so 8.1% undervalued compared to fair value. So they are right now in the fair value range, but according to Simply Wall Street, share price and fair value is in the range, but current price is 1660, fair value is 1806. So it's below fair value. So 16.6 is trading below our estimated fair value of 1806. So as it says, it's trading below fair value, but not by a significant amount. Future growth. So 5 out of 6 checks here for 66.6% forecasted annual growth. What I find very interesting is according to the graph, I don't know if it's very clear for you guys at home, but this is 2020 over here, and we have the earnings is under the US line of 0. and what we see coming around basically mid 2021 is earnings forecasted to become profitable around that time. 2022, it seems here that it becomes profitable. Now, it also states here that they do see that the company will become profitable within 3 years. So according to this graph, it looks great. And by 2025, just look at that. Earnings and revenue are significantly growing at a good pace. Analyst future growth forecast. So company 66.6, whereas the industry is at 82.3%. Okay, so company, industry, market 22.27, 22.7. Company forecast annual revenue growth 52.1%, 12.8% for the industry and market. So the annual revenue growth is great. A little bit lower for in the industry on this one here, but still above market, but not by a fair, not lower by a huge amount, like very little amount. So earnings versus savings rate, GreenPower's forecast to become profitable over the next 3 years, which is considered faster growth than the savings rate. Earnings versus market, GreenPower's forecast to become profitable over the next 3 years, which is considered above the average. Market growth, high growth earnings, GreenPower is expected to become profitable in the next 3 years. Revenue in the market, GreenPower's revenue is 52.1%, forecast to grow faster than Canadian market. And high growth revenue, GreenPower revenue is forecast to grow faster than 20%. So lots of positives here. Now, actually, when it comes to their financials or balance sheet, this is something that I like less, but you have to consider the fact that GreenPower itself is a fairly new company, although they do have a history behind that. But the last 10 years, doesn't matter who you look at in the EV industry, it's been an emerging market fighting off all the big boys, right? So I mean, you're really looking now for the future. This is where the transition is occurring, right? So it's hard to look at the past as an indicator when the future starting from now on is the transitionary state. So you got to basically look from now on. But whoever's been there in the past that survived the last 10 years shows a lot of significant strength, good history, good strength, right, to stay alive. All right. So financial position, assets 8.95 is the short-term assets. So short-term liabilities exceeds short-term assets, 9.66. And here we have long-term assets of 5.52, whereas long-term liabilities 7.21. So liabilities exceed here. So on the analyst checks out of 6, we only have 2 green, and the rest is red. Short-term liabilities. So GreenPower has negative shareholders' equity, which is a more serious situation than short-term assets not covering short-term liabilities. Long-term liabilities, GreenPower has negative shareholder equity, which is a more serious situation than short-term assets not covering long-term liabilities. So here's your debt over here of 13.6 on the equity liability side. They have a stable cash runway, as we stated earlier. And let's go to insider selling, which is also very important to look at. As you can see, it's all green. If we would have had shares sold, it'd be on this side here and it'd be orange. And you have no orange lines whatsoever. So significant insider buyings from the last 0 to 3 months to 9 to 12 months. So from the last year alone, it looks quite excellent. I found in the CDAR, because I went through all the articles, and I noticed, because we have to state as much as we can find to give a good picture of the situation. It was August 10, 2020, a lawsuit by Oldridge Brothers and GreenPower responds. So let's go and take a quick look at that. Right here, I said August the 10th. I had shut off. So, okay, here we go. So GreenPower Motor Company, Inc. Elite. So, okay, this is in CDAR. Lead manufacturing dispute of zero emission electric powered medium and heavy duty transit vehicles. We have here August 9, 2020. Cargo and delivery, transit and school bus markets are responding to recent articles regarding a purported claim brought by a former employee of the company. In its recently filed lawsuit, 42 Design Works advances vague claims that GreenPower has misused certain unspecified designs that purportedly belong to 42 Design. The claims are entirely without merit. I have been with GreenPower for 5 years and have directed the design, manufacture, and distribution of the EV Star platform and Synapse school buses from inception. No one has any rights to these or any other GreenPower products, said Brendan Riley, president of GreenPower. This action has no merit, and GreenPower will be moving to have this action dismissed, said Fraser Atkins, CEO of GreenPower. We will hold David Aldridge to account for this misuse of process. 42 Design was originally owned and controlled by David Aldridge, who was an employee of a predecessor company of GreenPower up to August 31st, 2013, when he left prior to the completion of his term of employment. All of the work that he did was for the sole benefit of the predecessor company. 42 Design was dissolved by the BC Corporate Registry on November 6, 2015, and only reinstated on June 29, 2020. 42 Design is now allegedly owned by Envirotech, a company with David Aldridge as the president. His brother, Philip Aldridge, was a founding director of Envirotech. Philip Aldridge was terminated by GreenPower on June 12, 2019. On December 17, 2019, GreenPower brought an action against Philip Aldridge and Envirotech. A former disgruntled employee brings an action with a defunct company that he reinstates a month ago. It's clearly an attempt to undermine GreenPower's recent successes. And it says that GreenPower cares deeply about its people, culture, and values. The company and board will continue to uphold those values. This lawsuit is frivolous, and the company will defend itself vigorously. So, I ended up getting also some other information because I go through social as well and stuff like that. And in here, GreenPower sues Aldridge over manipulative trades, Friday, December 20th, 2019. So basically it says that the allegations are contained in a notice that claimed that GreenPower filed at the Vancouver courthouse on December 17, 2019. The suit comes after Greenhouse fired Mr. Aldridge on June 12, 2019. At the time, the company said nothing about the reason for his dismissal, simply saying that it had appointed as chairman or whatever. But it turns out, however, there was a considerable history leading up to Mr. Aldridge's firing. GreenPower claims that he breached his duty to the company by secretly working at competitors for about 2 years, while he was still with GreenPower. So, look, naturally this is ongoing stuff, but let's look at GreenPower. According to everything that you see here, definitely the company has a beautiful future ahead. I don't know if anyone goes jogging or you just take a walk and you're near a bus or something like that, and then all of a sudden they take off and you're like, oh my God, like whatever. Or there's a whole bunch of school buses at a school, and you're just smelling all that carbon that's coming out. It's just horrible, and all those kids all around it. No one needs that. How about all the new delivery trucks that are going to be going out there? I mean, come on, with brick and mortar, just being dismantled, destroyed at the moment, and you're going to have a lot of delivery trucks. I'm not going to name any companies, but just imagine all these big companies or startup companies or whatever, direct shipping companies through all these other, just on my street alone, all my neighbors, myself, everybody, we're all buying online, and it's just being all these delivery trucks everywhere. And then of course you have the mail service delivery trucks and stuff. It's a no-brainer. We don't need more vehicles on the road. School buses, regular buses, like Voyager type buses, like long distance buses, Greyhound, what the heck ever. They're all going to go EV. They're all going to go EV. And we have double-decker buses here. I see a lot of growth for the company. I just didn't want to be involved in the whole reverse stock split of having, going from 700 shares, let's just say, to 100 shares, and being at such a higher price. I didn't see from there with a new startup company that it was at its time. This is my own opinion, of course. This is all my own opinion. But from where it was, it has dropped significantly. So I'm very happy that I sold today, right? Because or else I'd be holding the bag at the moment and waiting for it to go all the way back up to where it was when, thank God, I wasn't part of all that. But am I going to get involved in the company in the future again? Yes, I am. Absolutely. I mean, this company has a future. It has a future. New York ordered 100 buses. Listen, I would urge every single city across the planet to change all of their, transit system for EV. Now, that being said, I'm not just saying this company in particular. I'm saying just change it all for EV. Now, whoever exists out there in this industry at this very moment has an edge over everyone else. Naturally, they're open for sale, right? So there's an edge here. When you look at when they're going to be profitable, that's not like in 15 years from now. That's very close in the near future. I mean, the stats are there. Everything is there, like from different analysts' coverages. Now, when would I get back involved in the company? I mean, when I look at the stock itself, yeah, so I go here because I'm so used to using my phone for doing all my stock stuff. It's just absolutely crazy that it's just super, super quick for me to go this way. So let's just go here. So if I look over the last month, all right, you're getting a high of 23.64, and then you had a low of 13.34, and then it closed today at 16.60, all right? I think I had the stock at like $3 and something cents, and I sold just before. I made a profit on it. I got out just before that. I was going to do the whole reverse split. But definitely, I'm going to be keeping an eye on the stock. I can't, listen, no one can predict where a stock is going to go. It's on the NASDAQs, right? And they have great potential. So, the investors alone that could become involved in here. Let me just go check one more thing here. I didn't look at that. The makeup of the investors. You see, look, I mean, here we go. Here we go. I mean, 74% that are holding the stock is the general public. Individual insiders is 25%. That's pretty good, actually, 25% for individual investors. And you can see that they were buying more. And institutions is 0.1%. Watch when institutions come in here. This is where it makes all the difference. All right. Right now, the general public is 74%. And, look, it's in its infancy. Whether you buy the stock at this price right now, and you see it when it hits profits, it breaks even and has profitable within 3 years, whether you buy the company right now or whether you buy the company in 2 years from now, it's still in its infancy. It all depends on how much money you have to buy up the amount of shares. It all comes down to that. I mean, if you're have a ton of money, you can buy up a lot of shares even in 2 years from now. So, and naturally, it'll be more stable in 2 years from now. You'll have a better view of the future in 2 years from now, or whatever. But you can buy it right now at this more inexpensive price, or wait to see if it's going to drop more or whatever. But the point of the question here is does this company have a future, or does this industry have a future? Absolutely. And I don't see how they wouldn't. We're looking at at 2050 for basically vehicles just zero emission, gone. So if you're gonna make significant changes, one of the biggest changes you need is everything in the transport industry, everything with trucking and all kind of stuff. And it seems these guys are right on target. Damn, I'd love to own a company like this. If I had a startup company and my company was doing this kind of stuff, I'd be very proud and I'd hold on to it. So that being said, the future of this company looks very bright. So it's all a matter of when you decide to invest. That's all it's about. It's just when, which is very important. So for myself, I am going to wait, because whether I get it now or whether I get it at later is within the next year or something like that, now or within a year, sure, it might be more expensive. But if it's a future of company, if it's a future growth company, which I see it as it is, well, it's just going to keep on building and picking up and picking up, picking up, picking up. And then, you know, so listen, depends on how you play it. Naturally, I got a whole bunch of other the money tied up in other stocks, which I will not move. I will not move. We are way too close to having vaccines. We're way too close for the election coming around. For me, it's like right now I'm good where I'm at, and I'm not moving my stuff. But this is on my radar, 100% on my radar. So that being said, please hit the like button and subscribe. Listen, guys, the more subscribers I get, the more I'll be able to continue doing this. Thank you for everybody that's there. Naturally, the whole setup over here is going to be changing. I'm going to be changing everything, so that way, just visually, it's going to be much more attractive. And I'm going to be working on also on how to put things up on the screen, so that way when I'm looking at things, you get to look at them that way and not directly just me flipping the screen like that. Not that there's anything really wrong with it, because it's more of the information that's important to know where something's at and maybe where it's going. So, and we're going to have things that are, you know, that I see that might be negative or there is a positive future company, but right now is considered a toxic stock because of how much money has already been put into that stock. And we don't want to be stuck in some stocks like the .com bubble, because there are stocks at this moment that are in a bubble. And once the vaccine comes out, I don't know if those stocks are going to be doing very well anymore. And, you know, maybe they'll be shifting over to the tourism industry. Remember that. So anyways, guys, hit the like button and subscribe, please, so I can continue to keep on doing all these videos for you guys. And if you guys want, this was a comment. I did the GreenPower because someone commented they wanted to know my opinion on it. And that's why this video. And I have another video, I think it's called Loop Insights, that I'm going to have to be doing a video on, which I've already done the research on. So guys, have a great day. All right. Don't forget to hit the like and subscribe. All right. Do your research and invest wisely. Stay strong, guys.